All right, and we should probably be live by now. Yes, we should. Let me just share the stream with the group. Let me know if the music's too loud as well. All right, there we go. Welcome, everyone. Hope you're having a good day. I'm having an okay Saturday. I want to do this stream because it's been a while since the last time we do one. I kind of had like a bad period in my trading. To be honest, I've been trading very well lately. I've been trading pretty much like shit. So I say, why not? Let's be honest with yourself. Be honest with the people that is following you. Let's make it all back, right? That's what we do. So there's not a format on the stream. I just want to go about a few things today, mostly because I have time. I I, I have I have a free day today, so so I want to take a look at some updates that will like me to keep in mind, levels to keep in mind for the coming weeks, months, days, and whatnot. And also because I actually want to like feel good once and for all. I haven't been feeling good. So as you all are my friends, I think this is a nice opportunity to connect with people again, not become so alienated with like the world and that it can happen to any person that trades alone. I was watching a podcast. Watching. I was listening to a podcast yesterday. When a guy that mentioned how he went broke, basically, and reminded me of me. I went broke as well at one point trying to trade. Um, on 2020, it didn't work. To be honest, I had to go back to a regular job in order to save enough to try again. And then it fortunately worked, and then well, I started to do other things with my life as well. But that part is very true. That part is very true. To be honest, it's an activity where you are alone all day, and now our market is 24/7. Crypto is 24/7, so you are always behind the curve in some aspects. I've seen a lot of people also mentioning to me lately that they feel discouraged by seeing other people killing it on the market and they are not really doing well. And I can understand that feeling because it will happen to everyone at some point in their careers. Um, but it ends. This too shall pass is a powerful phrase and not only a myth, I believe. Because things go away. You can start a new life, you can start a new account, you can start a new routine if that's your thing. So pretty much that. In the humane part of things, I think it's important and it's good that we all connect with the human being that is placing the trades, and that human being has a solid reason to think about that way on the market and on herself or himself as well. So um, that's for the human rant side of things. So let's do one thing. Um, let's do the pivots for this month on BTC. Um, let's try to be as honest as possible with the levels that we're gonna plan on executing because one issue that I've been having, I'm 30% down on my scalp account that I started with 1k a few months ago. I haven't made any progress on that, which is quite frustrating. Probably I'm at the very low point in trading career, but I want to improve that. So one of the ways I think is via this process that I'm doing right now in front. Anyway, if you all remember, purple lines are monthly pivots. What a monthly pivot is an area on a higher time frame chart, daily, weekly, and monthly, which looks somewhat like this. It's a place where the price pivoted historically, and it hasn't been touched. So in this case, we see you can say it's a top or a bottom, but there is also this type of pivot, which is the continuation one. Yes, this is a candle. Um, on the monthly candle, on the monthly time frame, I mean, we see huge candle, monthly pivot, huge candle, continuation pivot, then a topping pivot, monthly pivot here, and then an old continuation one here. Why these levels are important? Am I just pulling it out of my ass or something? Yeah, you can say that, of course. Um, the reason I use them is because I've tested them. If you remember, I've told you many times, I spend a lot of time on the charts, uh, a lot. And I've spent the last 3 years basically doing this every day. So um, at some point during those 3 years, when I kind of wanted to nail the concept of where to place trades to avoid chopping myself like an idiot, basically, like I've been doing right the last week. Um, what I came to the conclusion that there are certain areas on the chart, on the price action chart, on the higher time frame that are most watched by certain traders, but by a good amount of traders because of the way they react on lower time. So mm, those are basically the what I call pivots. Here here I marked the monthly ones with purple. I use not this I used the same thought process for weekly, which are the orange ones, pivotal price point, untouched. I expect the market to react in a significant manner in the first touch of this line, of this magic line, so to speak. Same here, and same this very price that we are trading about right now. So maybe on the group you see myself telling when you ask me about a trade when we are reviewing a trade together, I tell you, well, I am I am in favor of your long, let's say that you wanted to place along here on BTC. First of all, I will tell you to regard the context of the trade. Where in the research history your 5 minute scalp is happening. And you might not pay attention to higher time frames because you are focused on a falling wedge in 5 minutes that you're seeing. But let's just see it as a live example. But for instance, I will tell you, okay, if you are trying to place along here for whatever reason, keep in mind this is a weekly pivotal price point. So try to monitor the trade and consider closing it if it goes below it or it starts to form a bearish structure, below it, something like this, because chances are the price is not ready to flip it. So even if on the weekly time frame, which is where we pull this level from, it will only look like a small move. This can be a catastrophic. Let's say you plan something like this and it doesn't work. Well, if you don't cut your trade at a reasonable level, you can start losing a lot of money. Um, that's one way to manage risk more dynamically, I'd say. And it starts with a very simple concept, which is the context. Con- Context is the first and most important aspect when you start planning trade. So the idea behind this session as well, this might be a somewhat boring time to be scalping, to be honest, and the day is quite short. So, but I want to show you the whole process, how I identify levels in a chart and how I try to make a trade out of it. So the context for the day, and besides the weekly period and whatnot, is that we are fucking chopping, and uh, are you a scalper? Be honest with this. Remember, we wanted to be honest with ourselves. Are you a scalper? Are you seeing any type of logic that you could play here? Would you have anticipated this move or this move, for instance, or whatever move comes after this just by the use of the naked eye, so to speak? No, and if you have to plot indicators in a transaction chart to start seeing things, I think it's not really a solid approach. And yes, I am not on my best shape right now, but I know how to trade, and I can tell you that um, the itch to trade, the itch to be in a trade because you don't want to miss a potential move, um, is a very random outcome. Um, I would say you don't control what happens after you enter the trade because that depends on the action on the market, what the market is actually doing at the time you enter. However, you can control where you enter, and I'd say that maybe if you don't see anything on the 5 minute chart, start using a higher time frame chart. And do we see something? Well, as we mentioned before, we had identified a weekly pivotal price point here. We are not using indicators, we're not using it. We're just using the context analysis in order to see if our trade would make any sense at the moment. Um, we try to place them and where we try to place them. So, okay, do we see an entry right here? Not really. I don't see anything other than price holding a significant price point. So one could argue that okay, maybe week long we could be biased on the long side. The pivots, they are higher time frame for a reason. They are higher time frame because they will also help you with the bias besides the context. Context in the sense that above them may be a good long, below them could be a good short. So it's very simple, but and it's not always the case. But you know what I mean. It's like it will help you form a bias, um, that can be flexible, of course. But I would rather be looking for longs as long as price manages to hold on any time frame lower than a weekly, above a weekly pivot. And that's why I consider them important, and at times I consider them the main tool for plus interest. If I didn't have anything to trade with, I only would have one tool to trade with in a price chart would be the pivots because as price is fractal, I can use any time frame and find levels to trade. It would be maybe a bit more difficult and would need to use wider stops, but I think the trades will not be terrible if I only had to use that tool. More than that later. I'm gonna sip my coffee right now. Okay. So we were talking about bias. Bias. The idea behind the context is the bias, and the pivots is the bias. So we will probably be looking at that long. Do you see? Now we start to imagine scenarios. Would you say price holding the weekly pivot and covering this gap? Well, it's not that much of a gap, to be honest. But covering this space right here would make sense. Would it be a trade you agree with? Mm, yes or no? I tell you why yes and why no. Yes, because I have a target, a clear target right here. This is the previous week value area low, and this is a monthly pivot, which is basically to go back to the monthly chart. Is this thing right here? Is this level right here? You see it? Sorry, this one right here. The the open price of the past month of April. So if price were is another way to see it. If price were to come back to that price point, I'd be looking to exit my long because I consider it will be an area of rejection. However, why am I not super confident this will happen right away? I mean, it will be a price action similar to this, just a simple sweep, and then up we go. The reason why is because, oh, sorry. The reason why I don't think this will be super easy trade to make, even though we have a clear target. I will show you why I say a clear target. VWAP, not 3 months, 1 week. What do we have here? This is last week VWAP. Oh, therefore, this is the fair value. Price tends to aim for the fair value of previous periods or their standard deviations, which is value area high and value area low. Previous week value area low. That's why I consider this is a good target for any long that we could enter here. But the reason why I don't think it will be an easy ride is because of the way price came lower, came fall from here. We have the inefficient gap, but then we have this sort of zippers, choppy price action. Then we form another. And the truth is that if price manages to do this instead of simply just falling in a very liquid way, such as this, like in one candle wiping everything, well, it means there was some construction volume around here. Price was undecided on whether it to go up or down. Buyers didn't manage to send price higher back into the old range, and it basically ended up chopping around our weekly pivot. As you can see, the pivot makes some significance. It's not just a line in the air that I like to draw. Also, what's the other significance if you take a look at previous it only has that significance. Forget about that. I was thinking this was a value area high of another period, but it's not the case. We are simply trying to find new fair value. Fair value is basically this a period of consolidation when the market is relatively stable. Maybe there is a deviation up or down, but price hovers around a certain price until the market decides, no, you know what, it's too expensive to be paid 29K for one Bitcoin. That's I'm gonna sell. And if the selling pressure, oh, by the way, this is like in regard to order flow view. It's really stupid, but it is true. This is probably the easiest way to understand order flow is like with a little tail of what people might and why the market decide to go lower. And it's quite fun as well because sometimes maybe you ask us why all of the sudden price is dumping. I want to make a bunch of jokes about that when you ask me like, okay, because people are selling, that is as easy as that. It is as easy as that, but there is another component. The other component is that but nobody was willing to actually buy here, and the reason behind that, if you're so keen to know reasons behind why price moves, is because people didn't consider at this moment that this was a fair price. I mean, nobody wanted to buy Bitcoin. Nobody's an exaggeration, but people with enough capital and liquidity in the form of limit orders saying, yes, I will step in front of this auction and absorb it. Well, it didn't happen. And where did it happen? Well, probably at a place where the price action chart, and this is my speculation and why I still use the pivots and still promote them. The market found more uh, willing participants to buy, and the reason, in my opinion, is because they found a higher time frame level that made more sense. So remember, it's all about incentives. We do this with our lives as well. It's like, would you do the same amount of work if you don't have an incentive in your, let's say, your day job? Maybe if your incentive um, is to, I don't know, to provide for your family or something like that, you will do a really good job, I think. If your incentive decays for whatever reason, or maybe on with your partner, you don't have the incentive to be, I don't know, fit or whatever, and then it's not going to happen. If you don't give people, and remember, the market is people, if you don't give people um, enough incentives to step in and to put money on the line, they won't do it. And that's why we have huge liquidation cascades. What was the, let's just check real quick, Pepe, because of course I can't be left out. I think I had it somewhere. Pepe USDT, maybe. Yeah. How did it get? Let's remember the case of Pepe, a coin that has, I don't know, less than a week, but that did huge amount of increase in price. A huge amount of increase in price. Pop it. And then the fact that you see inefficient gaps is the fact that buyers are more discouraged to buy right here than to buy lower. And yes, of course, if this continued ripping, such as when it happened here, it would have been significant mistake or a significant on the side of the people that didn't step in on the market to buy right here. But it ultimately was not the case. So in hindsight, you can say they saved money. But now we're facing more or less the same situation. If we're gonna make it very easy, very clear, this is EMA 200. It's a very popular indicator. I think like most of the new traders and start this indicator because it's a smooth representation of what price has done. Pepe doesn't have a lot of price action history, so that's why we are using a 15-minute chart to watch it. Let's say Pepe starts flipping this area, and Bitcoin is not straight out looking. I think the run can start again because there is an incentive to do that. There's an incentive by a lot of people like me, like you, that is doing that, and there's there is when you can start thinking about the probability that your trade has to work. So if you and everyone in your family or in your close circle is thinking about the same, it's very unlikely it's going to work because this is trading, and trading relies on edges, and edges are exploitable by you or by anyone that finds them. But up to a point, there is the counter edge exploiter, so to speak, which is people that seeing the 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 huge significance of certain confluences, they decide to fade it. And if they do it with a deeper pocket than you and me, well, they're going to win. For instance, this could have been the case here. I'm terrible at the speculation, but why price didn't actually touch the 200 MA? Well, I think if too many people were waiting for the exact touch to short, and a person with enough liquidity available to fill sell orders around here. Around this level, then he had got a pretty good trade. Of course, it was not just a person, and I am just speculating. However, it's a cool way to think about why people do what they do. I mentioned this because I won't say I'm tired because it's normal to have that type of questions, but it is my view on my take on how to think about what happens on the markets. You can speculate all you want, but if there is no trade to make, what do I even want? What do I even win with saying, yeah, you know what? The 200 MA was front run by whomever, by a wave, market maker, whoever you want to assign that property to. Well, what's a trade? No, there's no trade. Um, that's why I just wanted to mention. But anyway, I think I went some place that I wasn't I wasn't originally. I was reviewing BTC and what it can we can expect from it this week. Um, yeah, so in any case, that was one of the reasons why I think price is not going to go straight up, because there is a confluence of volume here. These zippers are gonna make price harder to climb. Uh, I do think this last part, for instance, is just on this off. This type of moves, which are naked gaps, like price went down here and was never retested, is in between the previous week value and area low and a monthly pivot. It is probably going to reject that first, and then it's going to be an easy path for price. If this were located at a different something like this, here's a great example on this same chart. You see, here there was an gap. It was covered to some degree. Therefore, when price approached here, there were some sell orders that were filled and supply decrease. That's what supply decreasing actually means. Supply is the amount of the orders to sell at a given point in the price chart. So price going back again, it tends to go higher, but ultimately rejects because supply probably shifted right around here. But what do we see here? We see another. Therefore, I do think that there can be some certain path, like a staircase type movement towards the previous known range up here. However, it's not a one-sided move, which the market simply nuked. It was a bit more orderly. That's why I'm not super in a rush to find the long that takes me here. Remember, we want to analyze context for a reason. So uh, context here, let's recap. Context here is telling me there could be a good opportunity to bounce from on the near term because we are sitting and trading above a weekly level. However, price has been incredibly choppy. So what's if you remember and have studied what I sent you, well, since you know me, about the system is context first, then what follows is the trigger, and then what follows is the execution. The part of the trigger is what we're lacking right now. Why? Because we cannot find any reasonable long entry. So we need to keep digging a bit more and see if we can accomplish that mission. So the 15-minute doesn't tell us anything. Let's say pretty much the same. I don't see an entry per se. An entry, how would an entry look like? And this is a good conversation as well. An entry would look like a pattern, like 1 second. An entry would look just like a pattern. Will look like a an inverse head and shoulders, like a falling wedge or whatever. Patterns are significant in that context. If you can make them work as an entry, they will be accomplishing their missions. If you see let's say an inverse head and shoulders, but it's happening in the middle of nowhere, in the middle of the gap in price in all time frames, well, there are chances that this is not going to do much. It's going to probably fail, and you don't know if it's going to work or fail, but the probability of it failing would be higher than if it's happening at the level where you identify an area that the market has it tougher to penetrate, so to speak. And in my consideration, the pivots are that because and this is interesting. Why the pivots all of the sudden are going to protect me and provide a good entry and a good guideline for a stop? Well, if you remember the conception of what pivots are, they are the top and bottom bodies and opening and closings of certain candles, a certain higher time frame candle. And if they are untouched, if this is the first time the market touches them, there is a very high probability that most traders have the balls, so to speak, to cross that previous high, that previous area sooner, heavily and strongly against the other participants. So they are most likely going to the risk at that area if they are, let's say, if it's we a higher time frame level such as this one, which you remember how it looked. Oops, it looked. It is this price point. So price coming back right here, the weekly chart will look still a bit ugly. It won't be making any higher high. So if you're long, it's not an unreasonable place to place your limit to sell and to get out and to take your profits. And if you're short, you have a much more favorable context around here because of the same reason. It's not that this squiggly line has to happen. Please understand that. I do a lot of squiggly lines and I used to criticize them a lot. Like, you don't know what you're talking about. It might seem that, but it's just a guide. So it's a visual aid of what you expect the market to do. So you can place your trade, and if you look at it closely, it's sort of like a pattern. It's like it involves a break on the market structure. It involves a price hovering around the level and not making any significant higher high, for instance. So it's more about that than to say, okay, what is the entry, what is the stop? It's not that it's incorrect to ask about them, but I'd like for you to think as well more critically about what you do, so you become an independent trader eventually. um, anyway, so that is the logic behind why we try to avoid trading. For instance, I told you yesterday that I had a terrible night of trading. Of course, I had a terrible night of trading. I was trading this bullshit. I was basically trading this, missing every opportunity, and it was my fault, of course, because I should have done better. But it's also at a very unfavorable context to be trading. So why should I have done? Well, maybe I could have placed an scalp when this daily level was being touched for the first time. Maybe I could have shorted here the weekly pivot. As you can see, it was pretty reasonable trade. Then the level started to get a bit more touched by price action. It's not as relevant now. But what do we have here as a new opportunity? As a new opportunity, we have a weekly an area that has not been touched after this auction was lost. If we remember the VWAP, ever since this week started with the big move lower, we haven't touched this level, and we haven't touched the weekly value area low. So I do will consider this a higher probability of success area for a short. Does this mean that it has to do exactly this? No, but it means that I will have a better chance making a trade that pays me better and that I won't be chopping my hands off as I have been doing lately because I was scared and bored and wanted to scalp. If I just simply wait for this level to get hit, of course it can get hit as I am sleeping. I can lose this trade. I can still enter and lose money, but I am certain that I will be making a better use of my time if I just wait for the level. So I know many of us want to be trading all the time. I know it's like a dream that we have that we want to be full-time traders as soon as possible because we want the perks, right? We want we want to have the lifestyle. We want to change our future and whatnot. And yes, I think it's probably. I'm still working towards that. I've always been honest with you. I still have to do other things to sustain my training, but I don't think there has been a single day in the last 3 days that I haven't spent it on the market. And as unhealthy as that sounds, that also sounds like commitment to me. And maybe if you are right now second guessing yourself or your life choices, well, okay, it's okay. Take that time and consider: is this something I really want to dedicate my time on? Is this something that I actually want to understand? Like at the beginning, one wants to understand what one sees, but when then things start to get complicated and concepts that you are not familiar with start to get thrown around. Like, be honest, how many of you even knew what liquidity was when you started trading? I didn't know shit. I just wanted to buy something and make money, and I unfortunately did. I bought a bunch of shit and made a lot of money. Then I lost all the money. I had to learn to trade, and I'm still recovering because I'm so done. But I guess my main message here is that the journey never ends. The learning journey never ends. So I don't know what that had to do with Bitcoin at weekly value area low, but um, I, it's something that I wanted to express. Maybe that's the reality. In any case, in terms of probability, I think it came from the fact that I was saying that there is no need to be chopping yourself every day if you don't really know what to expect. Yes, the other day I mentioned something that, for instance, if you pay attention here, this is a very choppy mess. It's the same price action. This is a 3 minute chart. It's the very same price action um, that we were reviewing seconds ago. But here, all of a sudden, you see these huge moves and say, "Hey, bro, there's like a 5 hour trade right here. Okay, but are you able to not get mad at yourself and at the market and find confidence to go low here? Maybe you can, and maybe as you can, you should be a scalper. But if you are a person that has to do something with your time, um, don't really have the tools to be able to visualize in a fast enough way how and why how price is developing, I think you should not be scalping because for the most part you will be losing money. Um, then then there's also a few other considerations when it comes to scalping. Um, let's just let's just review this. Let's say I'm pretty sure everyone is familiar with this as well. I've talked about this before. Um, it's an equity simulator. We're doing a lot of mixed mixed concepts today. Let's say you start equity, blah blah blah. This then all my comments will be gone because I clicked on those. All the sorry, the start equity use. Let's say you have 1K. The win probability. Be honest. Do you know how your win probability is? Some people actually do keep track of this, and they have shown me. Mine is very bad lately. On scalps, I probably have a 25% win probability. I should crunch the numbers together, but um, let's do 25%. 25% of win probability. Of win probability. The win-loss relation. Win-loss. This is an example of for all the scalpers around out there that want to have a bit of reality of how scalping will work. It is going to work more or less like this. Let's be honest with this part as well. What's your win-loss relation? What's your win ratio? You risk $20, and how much do you make over that investment, over that bet? Let's say, did you make $20 on average? Do you make 60 on average? Do you maybe make 5 on average, which will be a negative sort of win-loss relation. We won't be negative, we will be below zero. Which is something that with this win rate, the win probability will never. And I'm going to show you because this is math. It has nothing to do with this speculation. It has to do with consequence. My food is burning. I always need to burn my food. Oh my god. Yes. Listen, just burning my food for the 5th time I think this week. Need to be more concentrated. Anyway, let's go back to the mother thing I have. A win-loss relation. Let's just say you make $20 for. Let's say you make $10 for every $20 for every $30. Here in Bitcoin trade, you're gonna put 2%. All trades you risk 2%. Sorry for that. Okay. I told you it was going to be an unorthodox stream. I wanted to make it more human, so I burned my food. Anyway, let's say this is what you on average win, because this is true. Many people come to me and tell me, "Hey, I'm not making as much as I use." Of course. So how do you use what's your win rate? What's your win probability? Oh, it's pretty low. Okay, let's try to see how you're gonna do with this. Like, you're going to go to zero soon. But this is unprofitable asset. There is no way to make money this way. And it's not your fault, it's simply that it doesn't work, so you need to change it. This is when it gets very interesting, and it also gets a bit frustrating, because again we have to be realistic. What part of these components you think you are going to be able to change? Okay, you say, okay, but I'm going to start with 10K instead. It's going to be the same. It's just going to take you longer to reach zero, but you're eventually going to lose everything. So it's not about the money you have. First of all, let's just take that out of the question. What about the win probability? Yes, this is feasible. You can, for sure, increase your win probability by doing a few things, sorry, a few adjustments to your strategy. One of the ones that I'm currently testing as well, with mixed results because of the fee cost on scalping. Sometimes you get slipped and it costs you a ton of money that it shouldn't. But it's moving my stop loss in profit as soon as I can. So let's just say something like this. Let's say you took this trade. You saw this area. You saw this whole bullshit price climbing back up here, and say, okay, you know what? Here, this is the top end of the range. I'm going to short. I'm going to short because I know for a fact that I have a good chance because I've studied order flow as the guys told me, and there's an 80% chance that price is going to come lower, and this is the other extreme of the range. And if I use a tight enough stop loss, I'm going to get away with it. I'm going to make 5R. 5R sounds good, sounds great. I mean, people it's like a 5x on it's literally a 5x on what you put in the month on the trade. Sounds amazing. Okay, let's just do this on real life. If I had time enough, I will show you how I scalp on real life and how difficult that shit is. Let's say you don't even set the limit and you wait for price to come lower. You enter here. Fantastic entry. Price starts to go low. You are a genius. You are 1 hour up, 2 hour up. You say, you know what? I'm gonna let it rock because I believe I can get away with this fantastic trade that is gonna offset all my losses because I got such a good entry. Perfect. Next week you're up. Oh, sorry, you move your stop in profit because you want to minimize the risk of adding to your portfolio yet another loss. You don't want to take losses. You start to think, okay, I want to improve my win probability. I want to be at 40. Right? It start to look better. Maybe on average you're still making a 1 hour gain. You're still unprofitable, but you have a 40% win rate. So it's reasonable. I'm gonna let this trade run. You get stop break even, price does a 10 hour or whatever, and you missed it. You missed it today. Okay, that's one of the downsides of move. And also you got slipped here. It's not that you got it away for free. No, you lost money because I'm pretty sure we all are traded on very shitty exchanges for the time being. And liquidity, even on Bitcoin, is not the greatest. Yeah, if I'm trading with maybe less than 1K in Bitcoin on the scalp account right now, and I still get slipped a lot. Imagine using higher size. So what was I saying? Yes, you basically have to take that into consideration if you want to be a scalper. There's going to be a ton of hidden cost if you're a scalper. There will be times when you do the little trick of moving stop and break even. Price revisits your entry because why not? I mean, your entry is irrelevant to the market. Nobody knows your entry. Only you care about your entry. Price goes lower as you had expected. Fantastic trade, but you not only didn't participate in it, you also got slip and break even and lose money. Okay, that's one of the downsides to this whole approach, and why I'm still testing to see if it's better to take this approach than the loss. Results are very inconclusive, to be honest, but I will keep working on that. If you still hear from me and I'm still around and I'm still trading, I'm gonna let you know because I am pretty hell bent on that. I want to be a good scalper, and there are a few reasons for that. I mean, if you pay attention, one of the reasons is that you can work less time monitoring a position over days. I mean, I can be done. I did a scalping session this morning. Took me around 2 hours. Then I went to physical therapy. I did lunch. I came from my mom's house. I had to drive. I could trade if I were to be on a position day trade, like a trade set up on the 4 hour to daily chart, the trade would probably be at entry. I mean, I don't know, it's for the type of time availability you want to have as a person, not only as a trader. Um, Scalping may pose one of those advantages, but you have to be aware of the risk at the same time. In any case, so that's one of the ways in which you can improve your win rate by moving the stop break even quick. How quick? Well, as quick as you can. Don't allow the market to turn a lot against you. So you're gonna start to accumulate small losses, but more often than not, I think you will also start to get cleaner trades that are really driven by momentum. And I am experiencing this now because I think I've started to get better entries for scalps. I'm still trading like a fucking maniac in the middle of nowhere because it seems that I never learn, but I need to test. So I'm still doing all these things and see what it works best. Eventually, I think I will come up with a systematic enough approach to scalping Bitcoin. Maybe it is applicable to altcoins as well. I don't know. Um, but this is my sort of my project for the time being. If you've seen, I called maybe two Bitcoin scalps, and they both were shit. So I'm not calling those up until their strategy is more sound and reliable than that it is now. But I'm working on it. Anyway, that's. Let's go back to this. This is expectancy, by the way. What you always stop listen to me talk about is expectancy. Um, for most people, this doesn't look good. I mean, the expectancy of their trades looks bad because some of these parameters are failing. Maybe all of them are working against them. So that in regards to win probability. Let's just go with the idea that you want to improve your win rate by moving the stop quick. Let's just take this as an example. So it's still better. My equity count doesn't trend as much towards zero as I saw with the other example, but it's still not good enough. I'm still losing money in most cases. Very rare occasions I make money, like you see in these curves right here. So the other thing that you can start considering doing is maybe lowering the risk. But as you might have imagined, it's exactly the same. The only thing you have is that you have more attempts. You have more attempts, so it's not about risk. It's not about how much risk you trade. Remember, this is a simulation of all the trades at risk inside 1% of the capital. That's why it accelerates given a certain point. Look at this because the 1% is not significant in some account numbers. So it's not about the risk per trade. You're going to change this. The only aspect that I do think is more changeable if you want is the win-loss relation. And this might sound stupid because you say, okay, but didn't you say earlier that you don't control what happens on the market? You don't control if you trade as 1 hour, half hour, 5 hour, whatever. No, you don't. But you control your ability to leave trades for longer. And if you on this, you start to see seriously. Just by allowing your trades to run a little longer, you will have with this probability that remember we were trying to achieve by having the stopping profit as soon as possible, you are going to start getting a more consistent set of results. And this is again, please, this is not, it's a simulation. It's similar to the plan. When you know the plan, when you do 1% a day, then you compound that 1% a day, and that sounds fantastic. But you still have to trade. It's not like just updating numbers on a spreadsheet. You still have to wake up and spend time on the market, trying to make sense of all of the crazy things that might be happening. Try to see if the trades you want to take that day will make sense at the certain key areas that you identify as reasonable. You have to be on a good mood enough, like to not get mad when you take a stop or two or three. You need to have some risk management in place. You still need to be patient enough to not get an awful feel that eats your P&L in half when you try to enter or exit. There is a lot of things, guys. I mean, I know trading is hard, and me and many others know that trading is hard, and we have shitty periods as everywhere. And you maybe right now are having a shitty period. Okay. First of all, if you're having a bad moment in your trading, you don't know what to do, or you want to quit, or you want to simply not trade anymore because you think this is not for you. Okay, concentrate on what you can control. What you can control. Let's be just as subjective as possible. I can control the time I spend trying to get better every day because thankfully I have a job that I can work from my home, and I have other obligations that I live, but for the days that I don't have to play. If I have to do something, I go to the doctor. Well, it would probably not be a great idea that I keep a trade open, a scalp open, because I don't even have my computer to manage it. It's gonna be stupid. I need to avoid. I need to avoid the stupid losses as well. If you want to add something into the good probability part, besides the stop to break even, quick. Don't take stupid trades. I mean, stupid trades are not something like this call is never gonna work. It's less more than that. It's just a trade that you have no business doing because you don't even understand the reason behind. And I see many people do that a lot, and then wonder why they did so poorly. Well, you did so poorly because you basically gambled on an outcome because you expected it to work. Like, yeah, why not? Somebody better than me call the trade. Yeah, it should work, right? No, it shouldn't. And maybe this chat is a bit disencouraging. Maybe I don't have any agency to tell you what to do, but I think you all can learn, and myself can remember as well, that there are times in which there are parameters that you can control. What you can control, to go back to the example, is how much you leave your trade. This is an outlier, but how much you leave your trades open. So, for instance, right here, okay, let's go back to this. Let's imagine you say, "Oh fuck, I got taken out of break-even. I'm gonna enter again, same stuff." Around. Okay, there we go. We make one up. This sounds fantastic. And then you're gonna probably panic close because you see price doing this and you're scared to lose money again. What about if instead of that you leave price do its thing and then you got yet another up? Huh? It's gonna take you less trades to reach a more significant growth on your equity curve, and also you're going to be helping math to work in your favor. Because remember what happened when we didn't only collected one ass. We went to zero, guys, and we and me and you and everyone that preaches an idea of. Let me rephrase that. Anyone that is not willing to let live trades run under the right circumstances is doomed to never have significant gains, because you cannot read the market perfectly every time. No matter if you know order flow, no matter if you think you have the most prime entry of all time, it doesn't matter because the market can turn against you. And you know what? You can collect maybe a lot of, let's say you collect little less than 1 hour gains, right? You collect 0.3 hour gains. That would mean You were risking $100 and you could get 30. You say, yeah, 30 is okay, why not? Perfect. Um, try try as much as you can to not get a full $100 because loss, because you're gonna erase profits like a madman, and you're simply not going to make any progress. And it's not because I'm a dick. It's because that's how math works. So as you can see, this trading shit is a bit more complicated, and there are a lot of considerations to take than you would think that it would seem at the beginning. But it's not. It doesn't mean that is not possible. So what is my plan? And um, I will be wrapping this stream in a second because that was also part of the plan. Um, I enjoyed it a lot, to be honest. I had a lot of fun on the stream. Um, what's the idea behind all this? The idea behind all this is to run an account from this, from 1K, to whatever I can get this account. I've been doing that with, sorry, what is this? With the options account on Deribit, and I told you the last time that was sort of my 1K, 10K type challenge, and I think I can do that better this way than with other type of approaches. So we are nearly 50% gain on this tomorrow. Today I think we're lower. I started with 1K ETH, and yeah, it's 44% higher. And I bought one put contract just in case we nuke this week. I am protected by a bit, but I also don't think Ethereum is going to nuke, like to lose all the rally. So that's why I didn't bought more. It's just like honestly was out of fear a bit, like weekly close, and I said, okay, maybe I it's time to get some insurance, so I can still hold the position and the challenge has come better. Oh fuck! Now I burned my coffee. My God, guys, I'm a disaster. Uh, I burned two things on one stream. Next time I'm gonna burn my house. Anyway, yes. What I want to do is to run an account doing a 1K 10K challenge. And if I fail, I fail. It's okay. But I want to show to you, as people that support me, I don't want to call you followers or something, because you're sort of my friends. And I started being just a guy on the Discord that wanted to share trades, and in some shape and form, I still want to do that. I want to be like your friend and trade alongside you. So I will be using this account, a new account, on probably on Bybit or on BitGet, I don't know, and to run it as a 1K 10K type of challenge. Only thing I ask is that you bear with me and that you actually, if you want, remind me, if you have studied my confluences, remind me if I'm doing something stupid, like, hey, Ventura, you shouldn't be opening this trade in the middle of nowhere. Remember your rule, context goes first. I think that will help me, and I think it will be like an endearing experience as well. We're gonna track that, and we're gonna track my progress to see how we do. It's something I want to do to show that to show to myself actually that I'm capable to coming back to my mojo, to find again my sort of will to trade and to be in the market. I think it's gonna help me. And I think it's gonna help you too with the challenge as well, which is also an important part of being a person that shares trades. No, should be sharing trades as well. So with that in mind, I will be wrapping up this stream. I will be sending the challenge will be Bitcoin only. It's not going to include any altcoins. because I don't think it's a good idea to mix time frames, and scalps um, they usually are low risk than the alcon swing, so I think it's going to be better that way. So with that in mind, wish you all to have a great day. Hope you learned something today with me. If you have any question, let me know. Hope this part about the expectancy has helped you understand how it works and why you're not making money when you're taking small gains, unless you have just to for the so let's say you make $100 every $100 you risk. What win probability you think you need to have? Pretty high, right? You've seen the numbers. With an 80% probability, you are going to be very well. Maybe 70. Oops. Again. 60. 600 is a lot, no? 60. Start to get a bit more choppy. So unless you can, with a hand in your heart, tell that you have a 60% probability rate, a win probability rate, try to not TP so early, because that's when it's screwing your equity curve. And I've been prey of this a lot. I missed a lot of trades while scalping these past few days that would have been bangers 10 out tries, but I was scared. I was afraid of holding, and I cut them. And then I took a lot of small little trades, and I'm talking about hundreds of trades that basically went nowhere. And one full loss deleted three good trades. And it's not a good sensation. You feel like yeah, you maybe are learning, but you're also losing a lot of time. It doesn't put you in a good mental space. So not saying anything against people that likes to take profits fast, but just be mindful of how you do that, of how you bet, because for many beginner traders, and I consider myself a beginner trader, it's going to be very difficult to manage so many moving parts. Like, it's going to be impossible for you to handle dynamic sizing. Let's say something like, oh, I lost $100 in this trade. Yeah, you know what, I'm going to risk 500 on the next one. So a smaller move can make up for the loss faster. Okay, what if you lose that trade as well? What makes